everyone, I'm Gracie and together with Wes, we have worked on our final project, time series analysis and prediction of Apple stock. I will begin by sharing some background about our project and walk you through our design approach. Okay, first, the goal of this project is to analyze and predict Apple stock price over a 40 years period, starting from when it first went public. As part of this, we have created a training algorithm. This project uses data from Yahoo Finance API to study Apple's stock history. We have analyzed the data to identify trends and patterns in the stock price. To dive deeper, we have broken down the time series into different phases, like startup, growth, maturity, and renewal, to understand how Apple has evolved over the years. We have identified both short-term and long-term trends to support trading decision and developed a trading algorithm based on technological signals and trend analysis for automated trading. To evaluate the performance of this strategy, we used the three-month model to forecast future stock prices. Finally, we backtested the training plan using both historical and forecasted data to determine if it is accurate and profitable. Apple's growth can be divided into four stages. In the startup stage, from 1980 to 1997, Apple went public in 1980 and became a leader in personal computing with the Macintosh. But issues with leadership and increased competition slowed their growth until Steve Jobs returned in 1997. His comeback shifted the company's focus toward innovation in consumer electronics. Then came the growth stage from 1997 to 2011. During this time, Apple grew rapidly, launching iconic products like the iMac, iPod, iPhone, and iPad. Those products transformed multiple industries and made Apple a global technology leader. Next is the maturity stage from 2011 to 2016. After Steve Jobs stepped down, Tim Cook took over and guided the company through this period, while Apple continued to rely on the iPhone and iPad. They also introduced new products like the Apple Watch. The focus shifted from major breakthrough to smaller updates and building out their service business. Finally, in the renewal stage, from 2016 to 2020, Apple faced challenges like slower hardware sales and tougher competition, but they managed to keep growing by launching products like AirPods and strengthening their service division. In this project, we explored how simple moving average and exponentially weighted moving average can help identify short-term and long-term trends in stock data. We chose different window sizes for each trend to suit their timeframes. Based on those trends, we developed a trading strategy. When the short-term trends cross above the long-term trend, we buy 10 shares, and when it crosses below, we sell all the shares we own. To test this strategy, we looked at how it performed in terms of profit and portfolio value. We compare results using SMA, EWMA, and Kalman smoothed version of the data. Our goal was to find out which smoothing method gave the best performance for the trading strategy. After that, we used time series modeling to forecast stock data for the next 5 years. We start by checking if the time series is stationary, using the augmented Dickey filter test, or looking at ACF and PACF graphs. If it is not stationary, we apply first different thing to transform the data and check again. Based on this analysis, we determine the value of P, Q, and D for the Ariman model if there is no seasonality. If there is seasonality, we use the Surima model with seasonal parameters P, D, Q, and S. Once the model is fitted to the historical data, we make a prediction for the future. Finally, we test the trending strategy on the forecast data to evaluate its performance.
We use 10-day, 50-day, and 200-day windows to identify short-term and long-term trends using simple moving average and exponentially weighted moving average. The 10-day window captures short-term trends by reacting quickly to price changes. The 50-day window balances short-term noise and medium-term trends. The 200-day window smooths out fluctuations to reveal long-term trends. Shorter windows like the 10-day are better for detecting short-term changes, while the 200-day window shows the overall market direction. We applied an algorithmic trading strategy using SMA and EWMA smoothing to track crossover points of short-term and long-term trends for buy and sell signals. The left graph shows total profits. SMA performed slightly better, achieving higher profits by the end of the 40-year period. The right graph shows portfolio value. Both methods performed similarly, but EWMA showed more frequent fluctuations compared to SMA. Overall, the SMA-based strategy delivered slightly better profits while both methods showed consistent portfolio growth. We applied the Kalman filter to smooth the time series data, separating the stock price into the long-term trend and the short-term changes, showing the difference between the actual stock prices and the smooth trend. The left graph shows the separation displaying the original stock day price, long-term trend, and short-term changes, which reduces noise and highlights underlying movements. The two graphs on the right show profits and portfolio value. While the strategy generates steady growth, the total profit from the Kalman filter is lower than those achieved using SMA and EWMA. In summary, the Kalman filter effectively isolates trends but underperforms compared to SMA and EWMA in overall profits. Initially, the data was non-stationary, so we applied first differencing to transform it. After differencing, the ATF test confirmed the transformation. The ATF statistic is negative 12.80, much smaller than the critical values at 1, 5, and 10% levels. The p-value is extremely small, allowing us to reject the null hypothesis of non-stationarity. The graphs on the left support the result. The ACF shows rapidly declining autocorrelations as the lags increase. The PACF confirms no significant lags remain. In summary, the time series is now stationary and ready for the time series modeling. Since Apple stock prices show a strong seasonal trend, we use the Sarima 211 and 411 model to make predictions. This model includes two autoregressive terms, 1 degree of differencing, one moving average term. And for the seasonal part, four autoregressive terms, 1 degree of seasonal differencing, and one seasonal moving average term. We trained this model using the most recent 4 years of data and then forecasted Apple stock prices for the next 5 years. The graphs on the left display the results, showing the observed data, the identified trend, and the seasonal components, and the remaining residuals. The graph shows historical data and the forecasted data for Apple stock prices. The red line represents the actual stock prices over the most recent 4 years, while the green line predicts the stock prices for the next 5 years using the Sarima model. The forecasted trend appears smoother than the historical data because the Sarima model relies on the past patterns and does not account for sudden changes or unexpected events. This results in a consistent upward trend in the predictions. When applying the trading algorithm to the forecasted data using SMA and EWMA, we faced an issue. The long-term changes were smaller than the short-term changes on nearly all dates, preventing the algorithm from generating buy or sell signals. To fix it, we used the Kalman filter to smooth the forecasted data. The smoothed version served as the long-term trend, while the short-term changes were calculated as the difference between the forecasted values and the smooth trend. The left graph shows the Kalman filter trading signals, highlighting where buy and sell opportunities occur. The middle graph demonstrates the portfolio value, which grows steadily as trades are executed. The right graph shows the total profit, which increases consistently, reaching around 700 by the end of the forecast period. In this project, we analyzed 40 years of Apple stock price data to identify trends, forecast future prices, and evaluate an algorithmic trading strategy. We used 10-day and 200-day windows to capture short-term and long-term trends, with SMA performing best on historical data. To forecast future prices, we applied the Sarima model, which accounted for the seasonal behavior of Apple stock. On the forecasted data, traditional methods like SMA and EWMA could not generate signals, but Kalman smoothing enabled successful trading. Thank you.